With the growing trade tensions between US and Canada, the investors are wondering which Canadian stocks and ETFs are safe to buy right now. In this video, I will try to analyze the impact of tariffs on Canadian industries and try to find the best stocks and ETFs that could thrive despite the trade uncertainties. I made this video based on a suggestion from one of our recent viewers, Rohit Krishnan. And he said, with the growing tension between US and Canada about tariffs, which are some TSX stocks or ETFs to buy right now? So thank you very much, Rohit, for your feedback and supporting the channel. In this video, I'm going to cover 4 topics. Number 1, how tariffs will impact the Canadian stocks. Number 2, what are the best TSX stocks to buy for stability. Number 3, what are the best ETFs to buy for risk diversification, and some final thoughts. Hello, welcome back. My name is David Das, a retired engineer, and you're watching my YouTube channel, Think and Retire. In this channel, I talk about building wealth and income from the stock market. If I understand it correctly, the tariffs are on Canadian goods and not on services. So in my opinion, if I focus on services-related industries and sectors with less exposure to the US market, the impact will be minimal. You may have different opinion. Please comment below if you want to share your views and thoughts on this. So the first topic is how tariffs will impact the Canadian stocks. Tariffs can have both direct and indirect effects on Canadian stocks depending on the industry or the sector and the amount of tariffs. Here is a breakdown of 5 key impacts. Number 1, higher cost for export-dependent companies. Many Canadian companies rely on exporting goods to the US. So if the tariffs increase, these companies may face higher costs, making their products less competitive in the US market. Some of the sectors to be affected are definitely manufacturing, like auto, aerospace, steel, and aluminum, and also the energy sector. Number 2, the weaker Canadian dollar. Trade tensions and tariffs often cause uncertainty, leading to weaker Canadian dollar. While this can hurt import-heavy industries, it can benefit exporters as their products become more cheaper for US buyers. And I can see the winner in the tourism and hospitality industry. A weaker Canadian dollar makes Canada a more attractive destination for international travelers. And the losers will be retail and consumer goods. Companies that import goods from the US may face higher cost. Number 3, supply chain disruptions and business uncertainty. Many Canadian businesses rely on cross-border supply chains, particularly in the auto and tech industries. Tariffs can disrupt supply chains, delay shipments, and force companies to seek alternative suppliers at higher cost. Auto manufacturers like Magna International and Linamar rely on US-Canada trade, making them vulnerable to tariffs. Number 4, inflation and higher consumer prices. When tariffs are imposed on imports, like the US tariffs on Canadian steel or lumber, companies often pass the cost to consumers, leading to higher prices and potential lower consumer spending. I can see the sectors affected will be the retail, like the Loblaws, the Canadian Tires, the Metro. The higher cost for imported goods reduce the profit margins. And the construction industry, like the lumber, steel, cement, higher material costs slows down the development projects. Number 5, the stock market volatility and investor sentiment. Trade tensions create market uncertainty, leading to stock price fluctuations. Defensive sectors like utilities, telecom, and REITs often outperform in uncertain times, while trade-sensitive stocks experience sell-off. So based on these factors, how to trade in the middle of all these uncertainties? Number 1, diversify across sectors to minimize risk. Number 2, consider defensive stocks and ETFs, like in utilities, telecom, and precious metals, and monitor trade policy changes and economic indicators affecting tariffs. So the purpose of this video is to find the best TSX stocks and ETFs to buy in the middle of this US-Canada trade tensions. So with rising tariffs and trade uncertainties between the US and Canada, investors may want to focus on Canadian defensive stocks and domestic-focused ETFs that are less impacted by cross-border trade. And I'm going to talk about few stocks. And the disclaimer is this is not a complete list. This is just a snapshot of my opinion, and it is not a recommendation to buy or sell any one of these stocks. Please do your own fundamental and technical analysis research before investing. This video is for educational purposes only and not a recommendation to buy or sell anything. For defensive TSX stocks to buy, I can think of few sectors and industries. Number one are the Canadian Real Estate Investment Trust, or the Canadian REITs. These are all Canadian focused, like the Boardwalk Real Estate Investment Trust. They are multifamily rental communities, Chartwell retirement residences, the business of serving and caring for Canadian seniors. Choice Properties Real Estate Investment Trust. It's a high quality commercial and residential properties REIT. Number two is the healthcare sector, more Canadian focused. Number one will be Sienna Senior Living Inc. It provides senior living and long-term care services in Canada. Number two, Extendicare Inc. with a ticker symbol EXE.TO, provides care and services for seniors in Canada. Third one I have on my list is Dental Corp Holdings Limited, DNTL.TO, provide dental care services in Canada. Number three, services sector, and I can think of few stocks in this particular sector. Number one, Pizza Royalty Corporation with a ticker symbol PZA.TO. The quick service restaurants under the Pizza and Pizza 73 brands in Canada. The second one on my list is Game Host Inc. GH.TO. It operates hospitality and gaming properties in Alberta. It operates through gaming, hotel, and food and beverage segments. The third one on my list is K-Bro Linen Inc. KBL.TO. It provides laundry and linen services to healthcare institutions, hotels, and other commercial organizations in Canada and the United Kingdom. Number four on my list is Utilities and Telecom because they have a stable cash flow. I have three stocks on this list. Fortis Inc. FTS.TO, a stable utility company with strong dividends and little exposure to trade risk. Number two, BCE Inc., a major telecom provider with a defensive business model. Number three on my list is Hydro One, a regulated electric utility, making it a safe haven during the economic uncertainty. The next sector is consumer staples. I have a couple of stocks on this list. Number one is Loblaw Companies L.TO, Canada's largest grocery and pharmacy chain. And there are a few other grocery chains in Canada like Empire and Metro. And the next one on my list here is Andrew Peller Limited. They are into production and marketing of wines and craft beverage alcohol products in Canada. The next sector that's going to outperform, in my opinion, are the precious metals and commodities, basically safe haven investments. And I saw the prices rising on Monday after the announcement of the tariff. Number one is Barrick Gold, ABX.TO, one of the world's largest gold mining companies. Number two, Franco-Nevada, FNV.TO, a gold royalty company with strong cash flow. Number three, Wheaton Precious Metals, WPM.TO, a silver and gold streaming company. The seventh sector on my list is financial services company, and I have few stocks on this list. Number one is EL Financial Corporation Limited, ticker symbol ELF.TO. They operate as an investment and insurance holding company in Canada. Number two is Sprott Inc. SII.TO. They are an asset management holding company, and the firm provides asset management, portfolio management, wealth management, fund management, and administrative and consulting services to its clients. And I can probably add a couple more banks on this list. One is the EQB Bank and the National Bank. There are also those big six banks in Canada. Now I'm going to talk about the best TSX ETFs to buy during the trade uncertainty. I will talk about three different types. Number one is the defensive ETFs with a low volatility and more stability. Number one is iShares S&P TSX Capped Utilities Index, XUT.TO. They focus on stable Canadian utility stocks. Number two on my list is BMO Equal Weight Utilities Index, ZUT.TO. And the third on my list is iShares S&P TSX Capped Financial Index, XFN.TO. The second type of ETFs on my list is gold and commodity ETFs. They are basically for inflation hedging and safe haven. I have two ETFs on this list, iShares S&P TSX Global Gold Index ETF, XGD.TO, exposure to Canadian gold mining companies. And the second one on my list is BMO Equal Weight Global Base Metals ETF, ZMT.TO. The third type of ETFs on my list is broad market ETFs for diversification and growth. And I have 3 ETFs on this list: iShares Core S&P TSX Capped Composite Index ETF, XIC.TO. It covers a wide range of Canadian companies. Number 2, Vanguard FTSE Canada All Cap Index ETF, VCN.TO, a solid option for broad exposure to Canadian equities. And number 3 on my list is BMO Low Volatility Canadian Equity ETF, ZLB.TO. Invest in defensive, low volatility Canadian stocks. So there you have it. I hope you have enjoyed this video. If you found this video to be useful, please like and share. And if you are not subscribed to my channel yet, please do so you do not miss my future videos. Thank you very much for watching, and I will see you next time. Happy investing.